Hello traders, hello everyone, welcome to our new week ahead video. My name is Grega Horvat and I will take care of it because Blake is away. It's been a while since I recorded this video, so I think it's about time, especially as we are at the start of 2020, and I think that we are also looking at the globally and everything what is going on the world. I really think that it can be some kind of a decision timing about potential new reversal in the markets. So what I will firstly cover is euro dollar. Now euro dollar, as you know, at the end of last year we have seen a move out of this wedge pattern, so basically we are now in a corrective phase. Okay, now corrections are made by three waves. Which means that after we'll see a free wave movement, we can expect more weakness. So actually I'm bearish when looking at the whole price action or the trend on euro dollar. It's to the downside. I'm just tracking maybe a higher degree pause within this downtrend, and the question is how high these bulls can take the price. Well, when looking at this price action, I can see actually market moving to the upside within these two parallel trend lines. So I believe it's a correction. The only question is if it's already finished. Well, when looking at the 4-hour chart, and what I see here is that actually from this high, from this low to this high, it was a 3-wave move. Okay, this is not a 5-wave move. So if I would label here wave B and here wave C, and I would be bearish, well, then my wave count would probably be wrong, because as I said, wave C should be made by 5 subwaves, and that's not the case. So what I'm looking at is actually that this wave B, blue wave B, is still ongoing, and that either we will see more upside here for a wave C and then a reversal lower, or that we are going to stay in some more complex consolidation. But what is really important, that this is posed within ongoing downtrend, and that based on the current 4-hour developments, okay, I do not see any interesting patterns for potential trades. I believe that euro dollar will be again very interesting for to trade, but to the downside once the correction is finished. But so far I don't see it completed yet. Here's also another interpretation that I'm looking at. It can be maybe still ongoing wedge pattern here for wave C, meaning that new highs can be printed and then we see a move to the downside. So I'm tracking actually both wave counts, and definitely I'm not interested to trade in this one at all. I'm just observing it from a distance. Okay, but I think that maybe in a few months again euro dollar will be seen below those 2019 lows. Now looking at cable, it's very clear at the moment, at least on the short term. So what I'm looking at, well, firstly on a weekly chart, to give the full perspective, I'm looking at a big ending diagonal. Okay, and this ending diagonal should be made by 5 subwaves, where you have waves 4 trading into territory of a wave 2, which was the case as you can see here, and then obviously you can expect market to resume back to new lows here for a 5th wave, while its substructure of this 5th wave should be made by 3 waves. So I'm thinking that cable is actually at the perfect resistance, and I have 2 wave counts to confirm that. The first wave count is actually showing that this wave B, okay, which is part of this wave 5 down there. Okay, I said that 3 waves of decline should be seen on a wave 5. So I'm looking at a wave B to be maybe as an expanding triangle. Okay, I know that market has been very bullish here at the end of 2019, but it was also very bearish here at the end of summer in 2019. And look what happened. From this trend line we have seen immediate very strong reversal to the upside, and we can now be facing the same pattern but in the opposite side. Okay, we are now at the upper side of this triangle range and already reversing, falling away from that trend line. So I'm even more bearish, especially because we also have seen a move out of this upward channel. The next thing that is very important is that I have also another wave count here, which shows a potential expanded flat correction here for wave B. This was 3 waves up for a wave A, then you have a complex decline in 7 swings for a wave B, and then you have a very nice 5-wave movement here up for a wave C of B. So this makes also a very nice bearish case here for the cable, which means that you would expect a 5-wave drop for this wave C back below this level from 2019 lows. So definitely both wave counts suggest that both of those wave counts suggest that we are headed to the downside. But even if I don't want to be aggressively bearish, let's say that I want to be just temporary bearish, okay, and then I could still make a very nice wave count here, which would tell that actually market will come to the downside. So let me just hide this. Okay, so let's say that bottom has been formed here, that this has been some kind of a free wave decline and that we are headed higher. You have then waves 1, 2, 3, 4, 5. And what you would expect after 5 waves up, a free wave pullback. This was so far only one leg of a pullback, as you can see. I can label this as well. Okay, wave 1, 2, 3, 4, 5, and you should expect then an A, B, C pullback back to the previous fourth wave area. So I think that even with this bullish interpretation, in the short term, we could experience more weakness. Now, when looking at the 4-hour chart, that I will just cover it in a second, I think that actually this wave B is still incomplete. Okay, so looking at the 4-hour chart, which is here, this is a 5-wave fall from the highs, which is actually confirmation about everything that I just covered on a higher degree time frame charts, on a daily chart, that we are at least in temporary free wave of decline, maybe in a bigger degree 5-wave fall. But because of these 5 waves of decline, I think that market is bearish. But this drop may not be here just yet, may not resume from current levels, because I'm tracking a free wave movement here from the lows, and ideally we will see a test of 61.8%, and then maybe we get a reversal in the second part of this January. Okay, so cable, I think more weakness as long as we are trading below that high. Also, since we covered euro and cable, let's take a look on euro pound. Well, euro pound has made some very nice move to the downside, and what has actually happened is that price took us below this level from 2016 before market bounce. So this is very key level. Probably a lot of stops orders were covered there, and market is just reversing now in the opposite side. And what is probably the most important is that this reversal from the lows, okay, was made by an impulsive price action. So temporary, again, I think that euro pound may see more upside, because if I'm tracking here a wave 4, which still can be part of a higher degree downtrend, well, you still need to see more upside, because bounce from that low is not a completed free wave move yet. So looking at this 4-hour chart, okay, I'm referring to this wave A. Now we are wave B, expecting more upside for wave C. And also here I have an hourly wave count. What is probably the most important, based on personality of why I'm expecting more upside here, is because we have clear 5 waves up, and now you already see a very slow and, more importantly, an overlapping formation. Notice that this is much more complex wave count compared to the previous rise. It was a very clear recovery here, while the decline is not clear. We have seen some pullbacks, some rallies, and so far. So I think that still this can be a corrective wave B, and that sooner or later we'll see a resumption to the upside. Ideally, we will see a 61.8% retracement here before bulls actually will step in. And this goes also very nicely with cable, okay, where I also expect a little bit more upside and then a drop. Okay, now let's take a look on Aussie dollar. Now, Aussie dollar is definitely in a bearish mode, especially when looking at this monthly chart. We also took out some very important trend line support. So definitely, I think that we just should, if we can, if the wave count is not showing us any significant reversal patterns, then definitely I think it's always better to try to level the wave count so that you can expect more within the current trend. If you are in downtrend, try to level the wave count that you expect more weakness within current direction. If you are in uptrend, do the opposite. Okay, so here I have a weekly chart. What I'm looking at, we have waves 1, 2, you have a 5 waves fall for a wave 3, you have a wave 4, and you expect a wave 5 to unfold. So far I don't see wave 5 bottom yet. Maybe some would say that its bottom is here, but if I look the whole price action, okay, here you will actually see on the lower time frame that we don't have any 5 waves up from the lows, meaning that low is not in place yet, and either we are still bearish or trapped in some kind of a sideways price action that will maybe cause a drop later this year. So I'm still looking for more weakness here into these fib levels, but after this correction will complete, which I think can be actually a triangle. Okay, so here I have a daily chart, and what I'm looking at is a potential running triangle. This was a 3 waves up for a wave A, then you have a complex wave B, then you have a 3 waves up for a wave C, and now you are in a wave D. Now this comes, so actually the 4th wave is not finished yet because wave D and E are still missing here to complete the whole pattern. But wave D, or each leg within a triangle, should be made by minimum 3 waves, should show us a corrective characteristics. And if you take a look on the 4-hour chart here, you can actually see that this was only one leg to the downside here. Okay, so meaning that this is only the first part, or just one puzzle of minimum 3 puzzles for a wave D. So this is wave A, you need to see wave B, and then a final drop for wave C, maybe down towards this swing level here. It was from end of November, or maybe even lower before we get a bounce for a wave E. So for short-term trader, maybe that could be a very interesting pattern. Okay, at least for me, it's a very nice, clear evidence. We have seen a very strong drop. We have also seen here a broken trendline support here if you connect it. So I'm thinking that this is just a corrective temporary recovery that will send us to the downside, and I'm personally also tracking this pattern very closely for possible maybe even shorts next week. Now let's take a look also on dollar CAD. Now, as you know, I have been tracking bearish wave pattern on crude oil for a while, and we have hit some very important resistance on crude oil. So if crude oil is going to see lower prices because of very aggressive reversal lower that we have seen in the past week, I really think that dollar CAD will sooner or later make a bottom. Okay, so what I'm looking at actually on dollar CAD is a corrective counter trend movement against this uptrend that we have seen away from 2018 up to 2019 highs. Okay, so actually what I'm looking at is a wave A triangle for a wave B, and now we are in a wave C. Now maybe wave C some would say that it's already finished here, but I cannot count completed 5 waves down here for a wave C. Here's the 4-hour chart to give you the full perspective. This can be wave 1, wave 2, wave 3, maybe wave 4, and now we are going to see more weakness for a wave 5 and then a reversal higher. And this weakness could actually occur if maybe crude oil will see some kind of a corrective recovery, because after all this would be healthy after this recent drop. Okay, so let's take a look on crude oil since we mentioned it. Now here's this crude oil, and here's this very strong reversal to the downside. You can see a very strong just one leg of decline, meaning that even if this is a wave 4 as part of this recovery within wave C, you still need to see waves B and wave C drop. Okay, but my primary wave count is still a triangle here for wave B. Okay, not an ABC recovery. But in both cases, I'm looking at this correction away from 2018 lows as a counter trend movement within downtrend. Okay, so either we will see a completed triangle in upcoming months, or we will see an upcoming months retest of the 78.6% fib retracement and then a drop. Okay, if we are temporarily turning bearish, at least temporary, as I said, we should see 3 waves of decline. And here's this 4-hour wave count. Notice very strong drop, and now we are in a wave B recovery. So you should see a drop for a wave C, right? And you also see this very nice trend line, which I think could cause much more weakness if it will be broken. So if I'm on the right track, well, watch out for resistance at 60.60 up to $62 per barrel. This is probably a very interesting zone for our next drop. Why? Because this was a swing support, very strong swing supports actually that were taken out. So when a swing support is broken, these levels can become a really nice resistance if they are retested. If they are not retested, then this would actually tells you that bears are extremely strong, because bulls cannot even recover back to the resistance. Okay, what I have, let's take a look on dollar yen. Now, dollar yen made some very unexpected swings. I must admit, I have been caught on the wrong side for a few times here on this pair. I tried to label end of a wave D a few times, then I was looking also for continuation higher, and it always just, it didn't make any sense actually. I just moved on all sides of the trend here, but so far with this latest reaction last week, I really think that we are still here in this, within this wave D, and that actually could reach maybe 110 up to 110.50 area here on dollar yen. Okay, but the important is that we are in a wave C. Okay, and this is going to be a final leg, I believe, of this correction that is underway here away from 2019 low. So actually my overall picture suggests that we will see sooner or later a reversal lower into wave E, but I'm just waiting on this wave C to put a top in. For now that's not the case, because as I said, latest drop here was made by 3 waves, and more importantly we are reversing extremely strongly up from those levels, and still we haven't seen a break to a new high. So when correction is finished, it should be fully retraced, meaning that more upside should I believe occur here, as I said, towards this 110, maybe even 111 here, if I consider this fib extension before market turns lower. But I think when we reach these fib levels, just be very careful and watch out what will be also happening on stocks, because if stocks would come to the downside, then maybe this will be just a spike to a new high, and then we see a reversal. So since I mentioned it, let's take a look on stocks, especially on the S&P 500. So on the S&P 500, okay, just to give you firstly this 4-hour outlook. So I'm bullish on stocks, okay, I have no problem with that, because we are actually at the all-time highs. But I see some very important resistance levels based on different interpretations, which may suggest that at least pre-wave of a pullback, corrective pullback, can be coming. Now here is my interpretation, the first one, that actually this was wave 3 from that low. Okay, so wave 3 is made by 5 subwaves, and what is probably the most important thing, at least from a technical side of view, is that I'm looking at this Elliott wave channel. Okay, I connected this end of a point of a wave 2, end of a wave 4, and you can see that this trend line, I put a parallel trend line at the top of wave 1. Okay, and notice that 5 to 8 tested these levels, and you have also a trend line, the same trend line put on the top of a wave 3, which ended here actually because it was a flat for a wave 4. So generally speaking, I see stocks in some S&P 500 in some very nice, interesting technical resistance. Not to mention also the 161.8% extension of wave 1 through wave 3. Okay, so actually this is a very important key level where I think bears could actually step in. Also you have divergence here on the RSI. Notice a new high were printed here but not seen on the RSI. So I think that actually we may see a move lower here, or at least a temporary sideways price action if nothing else. And then I have also a 1-hour chart here, also another Elliott wave channel, okay, on a smaller scale. So again, connected wave 2 low, wave 4 low, and if you put it on the top of a wave 1, you obviously would not see a 5th wave bottoming, topping out below these highs. Obviously you need to see 5th wave at a new high, so you put a trend line at the top of wave 3, and again comes in the same area, trend line, different trend line, but the same area like we have seen trend line on the 4-hour chart. Okay, so I think that this whole zone is very significant. From a trading perspective, of course, I mean, if I would be long, but I would not, definitely I would probably look to go out. From a trading perspective in a short side, you definitely firstly would have to see a bigger 5-wave drop and then maybe wait on a pullback and short it. Okay, on a 4-hour chart, I just showed you this 5 waves up for wave 3, and this is actually wave count that belongs to this primary degree wave count on a daily chart, where I'm looking here at this incomplete 5-wave cycle from that low. Okay, so here we are in a wave 1, 2, we are still in the middle of a big wave 3, 4, 5, so much more upside could be seen based on this interpretation, as long we are trading above this trend line support. If suddenly we see a very strong reversal from here and broke this trend line, then obviously I would have to consider this wave count, which suggests that we can be actually finishing a wave B of a flat formation. So even if you're not Elliott wave guy, still would probably respect those fib levels. Okay, we have very important fib levels here on a daily chart. Okay, so the first important fib zone is probably this 138 to 161.8% extension of this drop. Okay, and then you have also 161.8% extension of wave 8 measured from a wave B, which comes in right there. And then you have another fib approach based on a triangle that might be labeled here in the middle of this recovery. You always pick the largest leg within a triangle, which was this one. Okay, and then you project it. First projection comes in from the end of a triangle, meaning end of a wave B in our case, which was from here, and the first projection was here. And then you take another projection from a breakout point, which was here, and you come in a little bit higher. Okay, so looking at the whole zone here, I think it's a very important for potential new at least 3 waves of decline. I will not say that we will see a drop for a wave C, because I don't want to be too aggressive. I want to analyze step by step. So firstly, I would always focus at least 3 wave pullback. It can be just a wave 4, and then again we'll turning back to the upside. But when trying to merge both wave counts, I just see that at least short-term pullback should not be a surprise. Okay. Also, I want to take a look on DAX. Now, German DAX is also in a new high, and notice that we have 5 subwaves within this wave 3. So again, we could be facing some resistance in the near future, and you will see again a new pullback in a wave 4. And also, since we covered stocks and dollar yen, I think it's very important to highlight, say, what is going on the 10-year US yields as well. So here we see waves 1, 2, 3, you have a wave 4, and you expect a drop for a wave 5. And obviously, move down in US yields would cause what? 10-year US note prices to rise, and at the same time, dollar yen will face resistance in line with stocks if the correlations will stay there. Okay, now let's take a look also on Euro pound. We covered Euro pound. Now let's take a look also on final market, which will be gold. Okay, now gold has seen a very nice move to the upside. We have tested this 61.8%, which I discussed several times that this could be seen before we may put in a top. And I think that this could be a perfect timing and a perfect reversal candlestick formation. Okay, now firstly, on a monthly chart, we see an ABC move. Okay, we have seen a move into 61.8%, but what happened last week is a very nice and strong reversal right from these fib levels. Okay, we have closed below, we tested the fib levels, we turned down and closed lower. And if you take a look here on this weekly candlestick formation, you can see a doji pattern. Okay, and I think that's a very important evidence why we might have seen already a limited upside. And I again will not say that we will see a strong drop. I will just say that be aware of lower prices and be aware of at least 3 waves of a pullback, especially after a current intraday recovery. So if we go to the intraday chart, here we have these 5 waves to the upside. Here we have this drop. Here we have your wave B, wave, or maybe even wave 2 unfolding. So we are definitely stepping into some very important week where a lot of decisions will be made about the gold. If we'll see a drop from here, then we may easily fall even below 1500. Okay, so traders, thank you very much for your attention. I hope that you enjoyed this week ahead video. If you have any questions, please let me know in the commentaries on our YouTube channel below this video. Have a good day. Bye.